I'm Catherine Ross, and I'm here live from the NYSE with Jim Cramer. Jim, you wrote yesterday that the market needs to stop talking about this bubble.
Yeah, well, look, it's the difficulty is that there's a group of people who are economists, okay, and they're looking at aggregate data, and there's no aggregate data investing, okay. Now you could say the S&P is, but it isn't. And then there are people like me who look at individual companies. The individual companies do not necessarily reflect what the Fed is talking about. The aggregate companies, the aggregate guys do. Okay, so you've got this terrible dichotomy. The dichotomy is that the economists see weakness, I see strength. But the strength that I see is very variegated. Like the strength in the managed care stocks today. Well, that's nothing to do with Powell. That has to do with the president no longer saying he's going to squeeze them. But you look at the market and you'll have a stock like UNH, which is in the Dow, which is at 27,000, and that'll go up and people say, well, you know what, Jay Powell's wrong. But it has nothing to do with Jay Powell. And we have tended to, as an overall media pool, to say that it's binary. That if the economy is bad, earnings will be bad. And it's not, because the earnings for a lot of the companies are not connected to that. Now, if we were talking about Parker Hannifin, that's been downgraded 3 times, yes. Talking about United Technologies, yes. Talking about Boeing, maybe. But you've got to understand that many of the stocks we talk about are not part of the economy. Last night and yesterday on Real Money, I focused again and again on the companies doing well that are not doing well because of the economy. And yet people continue to think that what matters is the Fed. You look at an AMD, doesn't have a yield, right? It's just a company. What did it do? It became better than Intel. When you look at NVIDIA, which is also the name of my dog, of course. It was not that the company named itself after my dog, vice versa. They just, Jensen Huang is a genius. And he invented chips that do different things. It was not Jay Powell. So it's been very difficult for me to try to deal with the economists because it is so easy for them to put together their mosaic because they're just spoon-fed. And my mosaic, which was able to tell me that the December rate hike would be bad, my mosaic takes a tremendous amount of work. It's boring, takes a lot of work, it's hard on your family. Because I don't have 40 people reporting to me.
And guys, you got to check out his column from last night, which made me laugh because it says that the bubbles need to stay in the bath, which is a great headline, Jim.
Well, it just drives me crazy. I feel like that people do not understand the two economies, the stock economy and the actual economy. And for instance, let's say you're looking at what Powell said about minority employment. Well, you know, it's bad. It's just not good enough. But that isn't why CVS is up. And then look what he has to say about the slack in the system, that people who are, kind of given up looking for jobs. That doesn't have anything to do with UNH. And so you try to relate what he says, and then you get people who say, well, wait a second, Delta is doing so well. Why is Powell cutting? Well, all the airlines had a tremendous merger fest under Obama. Everything was approved. So you have an oligopoly that makes them do better. It's not Powell. So it makes it so that the people who don't look at individual companies, they look at aggregate, they think I'm wrong. And I look at individual companies and I know they are wrong.
Let's just clarify that for our viewers right now. What you're saying is... Uh-oh.
Oh, well, I'm sorry about that. That's
all good.
For emergencies.
So what you're saying is that there is more to this market than just Powell, right? That's what we should clarify for...
I think it's really important for people to understand that individual cases prevail. So you get a company like Dow Chemical. Okay, we own this for Action Alerts. It's deeply involved with the economy, all right? Well, I got to tell you something. Dow's not doing well because the economy's not doing well. But then you take a look at CVS, okay? It is doing well today because the government's not coming after them. These are very different. And people have to understand that the S&P is made up of more than just the industrials. We are not an industrial country, okay? We are a service country. A lot of the service companies are doing quite well because they keep costs down. All the companies I talk about, the Cloud Kings, what do the Cloud Kings do? They keep costs down and they make sales better. Are they impacted by Powell? No. So, I mean, I think that people have to look at what's in the S&P. What was added to the S&P the other day? T-Mobile. Is T-Mobile affected by Powell? No. It's affected by a merger. And when you look at the individual stocks like I do, you see why. You see very closely why the heck the S&P can move up despite Powell's comments. And it drives me crazy because how many years do I have to do what I do before people realize that Disney stock is at a high because of things that Bob Iger's doing, not things that Jay Powell's doing? And there's people who are in business, our business, and people who opine that this is very bad that Powell's cutting when Disney's doing well. It's Powell's job to make it so that business is doing well. He doesn't want to go against business. Look what happens when he goes against business like he did in December. So I just think he was certainly allowed to crush business in December. Not a single economist said that was bad that I can talk about. Of course, I said it was bad, but not a single economist. So why isn't it okay that he resurrects business? There's a lot of misinformation because it has to do with getting your hands dirty. What I have often found in my career is that when you ask people about how the S&P 500 is doing, they give you some aggregate number. I will tell you how each company in the S&P 500 is doing because that's what I spend my life doing. Is it the type of thing that my daughters think is right? No, it's what I do. Yesterday, I had to do a piece where we were doing a piece late at night for Mad Money right before the show began. I'm not touting myself, I'm just saying this is what happens. We had a piece crash, so I had to put a piece in. And it was, what are the 10 stocks that did the best since S&P 2000? Okay? Well, you know what? I just wrote it because I knew the 10. You know, I knew AMD, I knew NVIDIA, I knew Align, I knew Abumed, I knew them. And I knew global, I knew payments, GPN, I knew market access, because this is what I do. They don't do that. They look at some aggregate number and they say, wait a second, S&P is up here and yet Powell is cutting rates. They don't look at what's in the S&P. If they looked at 3M, they would know that it's hurting. If they looked at United Technologies, they would know it's hurting. And these are giant companies and they employ a lot of people. And Lockheed Martin yesterday, the president saved 400 jobs. They would have been lost. There are companies selling who fire people every single day still. There are very few companies that are hiring. I walked into a Target the other day, and boom, Target is hiring because they're adding a lot of stores. But I think that this dichotomy between the truth and fiction is as great as I've ever seen it. And the fictional people are people who do not drill down and realize what's in the S&P. They just talk about the S&P, and they are not valuable.
Jim, you just mentioned Target, and I think that's a great segue into our next topic, which
Sure.
is Bed Bath & Beyond, which is real money stock of the day. Now, in your morning column this morning, you talked about Bed Bath & Beyond and how Target is taking sales from them. And there's
Target's
actually...
targeting them. Target's targeting.
Target
I
is
know
targeting
that
them,
for a fact.
Sure. But so on that, I have to say, I went to Bed Bath & Beyond the other day. I looked at some of the prices of garbage cans, and they were kind of expensive. So I honestly headed down to
China. I mean, Target. Yeah. I came up with this new acronym, WATCH, which is Walmart and Amazon and Target and Costco and Home Depot. And what WATCH signals, just so people know, is pricing power. They are able to keep the suppliers in check. Bed Bath does not have that kind of pricing power. Bed Bath does not have a CEO. They have an interim CEO, not unlike Wells Fargo. They don't have what I regard as being attractive stores that are worth going into. They don't have the right pricing. They have a good board. They changed the board. Is it too late? No, they have $900 million in cash. Of course, they fritter away a huge amount in their buyback. I'll talk about that in my real money piece, but it's maybe never too late to save. But you take a look, just keep following our stock of the day coverage and you'll get a good feel for it.
I just have to ask real quick, is Target coming for Amazon, the Death Star?
No.
Not another Death Star in the sky?
What Target's doing very specifically is going after younger people, trying to get them as early as possible. And those of us who have dropped kids off to school, and I've dropped off 4 of them, you typically would have gone to Bed Bath, and now you go to Target. And it's
true.
because Target's there. Target's at that moment. I know when my eldest went to college, we went to Bed Bath. Now there's a Target right next to where she went to college, one of the many colleges she went to.
My freshman year, I went to Bed Bath. My senior year, I went to Target.
There you go. You are it. You are it. There you go. You should do a piece about that. That's really, really interesting.
Let's switch gears because I have an investing education question for you based on oil. When an investor is seeing hurricanes or any other natural event happening, what should they do with oil?
Recognize that we are putting out more and more oil every day. You're just getting you've got an inventory drawdown maybe because there's not enough refining, not enough oil going in the system. But don't kid yourself. We did 12 million barrels last week. 12 million barrels a day. That wasn't supposed to happen. We will be at 17 million in a couple of years. So we've had to trim all oils because the world's against fossil fuels just when we are producing more and more oil. So if you have a hurricane and they temporarily spike, which a lot of people thought they would, then you sell. If I want to own an oil company, I'll own Caterpillar, which does a lot of machinery that's needed to take oil, take us to 17 million barrels.
And Jim, before we go, you've got, speaking of Action Alerts, you've got your Action Alerts Plus monthly phone call next week, next Wednesday at 11:30. What's the most important thing that you're going to talk about that investors need to know?
Well, I'm probably going to start with Jeff Lawson and Twilio and how hard it was to buy Twilio because the stock's up so much and why it's not as dangerous as it seems. There'll be a couple others that we'll profile. And of course, I'll be working with Jeff Marks. I think it'll be a very good call.
I'm looking forward to it.
Thank you.
All right, thanks, Jim. That's all the time that we have for today. For all of you watching on TheStreet.com or on Facebook, we are now jumping over to our Action Alerts Plus members-only club video on ActionAlertsPlus.com. Thanks for joining us. I'm Catherine Ross, and we'll see you tomorrow.